Welcome, everyone. Thank you for joining us today. I'm 𝗖𝗽𝗶 Biniaz. I'm joined by 𝗖𝗽𝗶 Benesocky. Welcome, Ava.
Thank you, August. Hello, everybody. Today we are joined by Darren Voros. I hope I said that right. Welcome.
Nailed it.
Welcome.
Welcome, Darren. Great.
Thanks for having me, guys. I really appreciate you having me on.
Wonderful. Darren, why don't we dive into it? And why don't you please start off by telling our viewers a bit about yourself, your background and your experience and involvement in real estate, please.
Yeah, I think I got started, like most people, probably in real estate, almost by accident in a way. You know, I worked over in Japan for a year in 2001. And in that year in Japan, I was able to save up some money because, you know, I worked for Universal Studios and they brought us over there. I was a performer. My previous life, I did musical theater. I was a singer, dancer, actor. And at 25 years old, I went and worked in Japan for a year, and we got a per diem and we got a salary and we got our train passes and our gym memberships and everything taken care of by Universal Studios. And so I saw that as an opportunity to save up some money. And I did that. I never touched my salary the whole year. I lived off my per diem and had a great time over in Japan. Came back to Canada and the US exchange rate was really good at the time for Canadian dollars. I got paid in US dollars. And I thought, what am I going to do with this money? And, you know, that's kind of when I looked to real estate. And I was living in Toronto at the time. I had just moved to Toronto. And I couldn't afford anything here, really. I would have been house poor if I bought something in Toronto. All my money would have been going towards that. And I also thought that it was kind of crazy, the prices in Toronto. You know, you guys are from the West Coast, I think. And but you would be dealing with similar stuff. You know, this was 2002. And I thought, wow, who the heck would pay $160,000 for a condo in Toronto? And so I didn't buy anything in Toronto. I went back to Alberta, where I grew up. Bought a house there. It was a builder.
Alberta girl.
Oh yeah, there we go. Yeah, so it was a spec house from Alberta that I bought. I came back 4 months later. It was done, and I thought I'd get into the renovation space a little bit. So my mom and I and my brother-in-law, we finished the basement. That was my first kind of renovation experience. And long story short, I tried to sell that property right after we finished that, and I put it on the market, and it didn't sell. It wasn't because the market wasn't strong at the time. It wasn't because we didn't do a good renovation. The problem was, I mentioned I bought it from a builder. Well, the builder still had lots available in the neighborhood. And so why would anyone buy the house from me when they could pay the exact same price to go directly to the builder? And if they bought from them, they got to customize their own floor plan and their own paint and cabinets and countertops. And so I couldn't sell it, or at least I couldn't sell it for a profit. And so then I thought, well, what's my alternative? And it was renting. And so I rented it out. My first tenant experience was a horrible one. I had to evict my first tenant. And then my second tenant was great. I rented to a company, a corporation rented to me for 4 years. The market went crazy in Alberta from, you know, when I sold it in 2006, I'd almost doubled my money. And then I came out to Ontario and bought 3 properties here in a relatively short period of time. And that was where I saw exponential growth in my real estate portfolio. And that's when I got really excited about the possibilities of what this industry could do for me and what I could get involved in. And really the rest of it from that point on is just, you know, I think an organic growth pattern that happens for most real estate investors.
Incredible. It's lovely to hear a story as such where you got into the real estate business and you were put through the grinder, you know, I mean, experiences that you had. So I really enjoy hearing our guests' background and their involvement and their transition, and that growing process is great to hear. My background is in construction and development. So I just got to kind of quickly talk about this. We were watching your YouTube video and I noticed you on job sites, mid construction and you were dressed so sharply, dressed so well. So I'm like, hey man, this guy, for a guy who's construction, who's talking about, conversions and construction, he's very well dressed. So I really appreciated that. And I just had to set up, but Ava, go ahead.
That's a nice compliment. You know what, Darren, I visited your website and you know what, I really enjoyed reading when I read coach and partner. Isn't it the best when you can actually partner with your professor?
Yes,
you will.
Definitely.
Isn't that pretty cool? So why don't you go ahead and tell us about that, please?
Yeah, I used to work for an organization called 𝗖𝗣𝗶𝘁. I'm sure you're familiar with them. 𝗖𝗖𝗃 is an investment network that was formed by Scott McGilvery, the face of HGTV, and the Income Property was his massive hit. I got introduced to that organization, and they hired me as a speaker. So I used to go out and travel all over North America, giving like a 2-hour free introductory session to that organization. And I did that for 3 years. It was an amazing experience. I loved getting out and meeting new people and being involved as a real estate investor and a real estate coach and all that kind of stuff. And I was last year around this time, I was coming back from being away for the whole winter. I like to get away out of Canada for the winter months. And I thought, you know what, I'm gonna step aside from this organization, and I'm gonna start to build my business instead of building theirs. And so I just thought, what do I need to do? I need to launch my website. I need to launch, some sort of, thought leadership platform, whether that's a podcast, a YouTube channel, whatever. To me, that's the greatest way to get people to start to learn about what you do. And so I did that. And along with that, I knew that was going to come, people asking me to coach them through real estate transactions. And so I kind of launched all three at the same time. I would not recommend that in hindsight. It was a tremendous undertaking. And you guys probably know, depending on how much you want to pour into your thought leadership platform, that can almost be a full-time job in itself. I mean, getting my 2 YouTube videos out per week in the beginning was a 40-hour job. I was doing all the editing, all the posting, all of the thumbnails and the social media for that. Luckily, the channel kind of took off a little bit in my very small way that I wanted it to. And I've been able to bring people in along the journey and hire out, a video editor and somebody to manage all my social media and things like that. But the coaching is just a byproduct of that. I have a very small coaching clientele that I work with. I have no aspirations of being a full-time real estate investing coach. I really love what I do every single day, and that's being a real estate investor. But I do like the clients that I work with. Most of them want to learn about what I'm doing, and that's a great fit for me. So that's kind of how it all got started, and it's been a really cool journey to bring people along and teach them, what I've learned over my 20 years as a real estate investor.
Amazing. Yeah. I just want to briefly touch on it a bit more before we get into today's topic about apartment conversions. But that relationship that exists between the pupil and the master or the protege and the mentor, that relationship exists. I mean, if you look at it in college, in academia, in trades, there's always that relationship that exists. But when you have that relationship, and then you can also partner with a student or with someone that you're coaching, that's an incredible kind of transition, which you could have a current deal that you're working on, and that we really enjoyed seeing that because we really appreciated that.
Yeah. Big time.
Sure, go ahead. If you go.
Yeah, no, I just think it's nice to to have that firsthand experience. As much as some of my students are actually quite experienced, they're actually looking to level up, and some are just like getting into real estate investing. So it's always interesting to bring to get people in their different paths and their different journeys, and even myself, like, I don't know about you guys, but I'm still working with coaches as well. I just work with people that are a little bit higher than me and where I want to go. We just hired a business coach, nothing to do with real estate, just specifically around my business and how do we build that. And now I have a development coach and I have all these other things. So I think that mentorship program is something that I didn't do as an early real estate investor. And I really, really, if there's one regret that I have when it comes to real estate investing, is that I didn't put money into my ability to grow. And I think so many people are like, yeah, but if I took that, whatever that number is, $5,000, $10,000, make it $100,000, whatever the number is that you're going to spend on coaching, I think that you can then leverage that to be able to grow your portfolio just that much faster. And for me, it's not about that consumer mindset of this is going to cost me $5,000 or whatever that number is. It is, this is an investment. This is an investment in my education and taking me to the next level and avoiding to make all these other mistakes that are potential with me just trying to go at it on alone and reading a book and trying to think that I can, get to that next level.
For sure. No, is that hunger in you and that the hunger to learn more and the humility. So that's very important in any kind of business. Doesn't matter where you're at, even if you're at a pinnacle of success, is wanting to learn more and be humble enough to allow yourself to learn more and have mentors and coaches. So definitely agree on that.
And I love to hear that he still has a coach. This is a never-ending learning game, and you always got to keep up. And August and I always, when we have a conversation with just one person, if they say one sentence to you, it could help you for the rest of time in your business. So having that coach to guide you, or even a mentor, is everything.
Especially in real estate, with the connections they can create, because networking is very important. Connections are very important in real estate. Great. Yeah. So
now let's, why don't we talk about apartment conversions? So I'd love to hear more about this.
And maybe you can kind of briefly talk on you spoke about how you got involved in real estate, but maybe talk about it as far as on the construction side.
Yes.
and what interests you about this concept of apartment conversion and yeah, tell us about it.
I think that it, again, happened somewhat organically. I started with, buying a property, renovating, like I mentioned, the one in Alberta. The next two after that were kind of just slightly larger renovation projects. And I'd, take on a little bit more and learn a new skill set. And then a couple of years ago, I did a ground up build, took a property in Toronto, bulldozed it to the ground, and did a purpose-built triplex with a laneway house. And I was the GC on it. I did everything except didn't put the shingles on the roof. I didn't do spray foam, and I didn't do the HVAC, but literally everything else I did with a small team of people. And that was such an amazing experience for me. I really loved being in there every single day and actually building a house. And I live in the laneway suite now. That's where I am, and the triplex is right there. And it's kind of a staple to the neighborhood. But, one of the things that I learned in that journey was I could not scale this business because me being on site, I just can't do it, and so I started looking at how I could get to that next level. And the next level was me really taking a step back from swinging the hammer, if you will, and starting to manage with my expertise. Because when you go into a situation that you're taking a building from something and turning it into something else, there's a lot of red tape that is involved there with the city, making sure that the zoning is there and working with the architects and the engineers and going through what's called the minor variance process here in Toronto, where it's like, okay, the property is zoned to do what you want to do, but it doesn't have enough parking spaces, or you want to go a little bit closer to the property line than you're allowed to. Well, those are all minor variance applications, and that's a whole process, and navigating that with your neighbors and
you
with
still
the
have to
city.
go in front of the council for those minor variances.
It's a committee of adjustments. So it's a small committee of individuals, not the council per se. That's a zoning change, but still, somebody's deciding your fate, and so there is a bit of a dance when it comes to that, and just really understanding what the council or the committee is looking to approve, and what kind of applications are getting moved forward, and what kind of stuff they're not going to be so in favor of. And so with that experience, I took that on a smaller scale, and I thought, okay, well, how do we do that on the apartment side? Because really, my goal was to get into that 6+ units, because now we're getting into commercial financing. And that's where I think you get economies of scale, and you also get the ability to have the building start to qualify for financing instead of you personally. And that's when we just said, okay, well, I have this experience with the conversion and the construction. I can step back and manage. I could probably do a couple projects at the same time, and I can build the portfolio just that much faster and the business that much faster. So that's kind of how it came about, and that's where we're at right now.
Great. Are you actively involved in any of these particular? I think I saw your video. I saw you inside one of the places that was under construction. But are you actively converting? Is this single family being converted to a 6 individual condos? Is that kind of the concept, or apartments? Are they meant to be resold, or they're meant to be rented?
Great question. They're meant to be rented. We have. It's always been my business, and so I not to say that I won't do that in the future, condoize things and maybe sell off some stuff, but I just like having rental portfolio and I like having rental units. So we take a single family dwelling in Toronto, big houses, like 3,500 square feet, 4,000 square feet, on big lots in established neighborhoods close to transit. So sought after locations. And this was part of the learning experience too. You know, when I was doing my duplex and triplex conversions here in Toronto and in Hamilton and all over the GTA, when you get into that market, you're competing with every other person in that first time home buyer market when you're looking for duplexes and triplexes, right? Because everybody wants to take a property and convert it to a duplex or triplex. And, you know, they're all looking in that $1 million price range. And so we were getting outbid by people that are planning to live in these houses for 10 years. And I'm like, I am not going to overpay. I'm an investor, you know, so it doesn't make sense. But when we started to look at what's the next price point up, you know, that $2 million price range, well, then you eliminate a lot of first-time buyers. You eliminate a lot of bigger players because they're like, yeah, $2,000, $2 million. I'm not going to buy something and do that, you know, do that. It's not worth my time. And so we kind of found a little bit of a niche market in there. And so we're buying in and around that $2.5 million range. We're taking these 3,500, 4,000 square foot homes and adding to them, you know, both like with extensions and additions. We're creating about 6,000 square feet livable space inside. And now our formula is basically like 2 units in the basement, 2 units in the main floor, 2 units on the second floor, and 2 units in the third floor. And so we get these 8-unit boutique apartment buildings in well-established neighborhoods, close to transit, close to tons of amenities that, you know, people are willing to pay top dollar for rent.
Great. And is it ground up construction, or are you renovating the structure where it's at?
It depends on the project. So yeah, the two we have under construction right now were existing buildings and we are just renovating them. Although by the time we're done with these things, we might as well have taken them down. Really, the only thing that's like going to stay in place is the external shell. Yeah. Like we're doing all new floor assemblies. You know, we're doing additions and so yeah, kind of like the front facade of the building is staying and everything else inside is brand new, all new plumbing, electrical, everything, HVAC. So yeah, but we do have 2 new projects that we're working on right now that are going to be ground up builds.
Amazing.
That's fantastic. Now I've been a real estate agent for over a decade now, and I'm always curious about how the market's doing. How's the market doing in Toronto?
It's absurd. Like everywhere else in the country, it seems like I have a portfolio in Alberta. That's the only place that's like just been, you know, kind of flatlining for like 5 years.
Cash flow though. Alberta is a cash flow game. Toronto, Vancouver are the appreciation games. And the United States is appreciation and cash flow, depending on where you look.
I sold real estate in Alberta for 8 years. So it's a good little.
So I have a small portfolio in Red Deer where I grew up, and it does very well for me. You know, like I say, you're right. It's just slow and steady cash flow, pay down those mortgages. Tenant quality is good, but here in Ontario and especially, you know, the Toronto area, there's been a bit of an interesting shift in Toronto because the condo market was going crazy pre-COVID, right? And then you see like everyone is kind of like, I don't know if I want to live in a building with 800 other people. Yeah. And so that market kind of like had a bit of a correction for sure, which was interesting to watch. And now it's slowly sort of trickling back because, you know, people are smart enough to go, well, when COVID's over, the immigration gates are going to be cranked open and people are going to flood to the markets they always flood to, Toronto and Vancouver and Calgary and Winnipeg and wherever else they go across the country.
300,000 immigrants every year coming to Canada, and most of them want to live in Vancouver and Toronto.
Yeah.
That's just pure like economics, right? And so when you look at that, there's people that are seeing the value of condos where they're like maybe at the bottom of where that market's been for a long time or purchasing, and that's kind of driving that demand. But the single family dwelling like market in Toronto has just been, you know, 30, 40 offers on properties, things going hundreds of thousands of dollars over asking. And it's just trickling out to everywhere around Toronto. In fact, there's been a bit of an exodus out of Toronto, I would say, in some cases to the suburbs. People are realizing they can live in Hamilton and commute in maybe twice a week where they used to have to come in every day. And so now they're like, hey, I wouldn't mind owning a little bit more property and having maybe a yard. But I also think there's going to be a bit of a remorseful period for some people that are like moving out of the city. And then they realize like in 16 months or 18 months, they're going to go, I hate being in my car even 2 days a week. And I think there's going to be a mass influx of people trying to get back into the city, and now they're going to be priced out of the market. So it's been a really interesting thing to watch of what's going on here.
For sure, it's hard to guess, but we have a bet on a thing on the same same topic. I believe with remote working and what's happening with many of the larger companies allowing people to remotely work. Also, there's a new kind of a new startup that's coming that I believe is already operational, which allows big corporations to give incentives to their employees to say, hey, you can go work from Indonesia from a beach for 3 months, and we'll pay for all your expenses. And this is an incentive, so you can still work remotely for our firm from this destination that you enjoy. So I potentially see this kind of the glamorizing concept of the hard-working man working from an office. I think that's going to change, especially with the new generation coming out. They might not want to be there, and at times people could be more productive when they are, in a different setting or in their home setting or closer to their family. But it's very interesting to see.
Unless you have little babies running around, then you're going to be distracted by kids running around. Easy enough for us to say because we don't have the children quite yet, right?
And also, in some cases, some husbands and wives just want some time away from each other. Like, God, I want to go to the office.
I want to go to the office. So it's a hit or miss.
Interesting conversation. But just one more, I want to talk to you about the conversion, and then we can get into the next topic as far as how you possibly raise or joint venture to do these projects to scale. But touching back on the conversion, can you convert? You were talking about that you look for larger lots in great neighborhoods that are close to transit. Do these homes that you're converting, single family homes, do they need to be on arterial roads or secondary arterial roads, or they could be in any neighborhood that you could convert them?
Yeah, it's a great question. And I think it's something that I teach, my students and people that are getting into real estate investing as soon as you can. Just really understand your local zoning bylaws. If you look at the zoning bylaw in Toronto, most properties in the core of Toronto are zoned R, which stands for residential. But if you look at the R zoning and you really break it down, R zoning in Toronto allows for single family dwelling, detached dwelling, like semi-detached townhouse, but it also allows duplex, triplex, fourplex apartment building. Okay. So the zoning actually allows you to build an apartment building. Now, within that, obviously, they wouldn't allow you to put a 10-story skyscraper on a 240 by 200 lot. So you're now constrained to what the parameters of the zoning bylaw will allow, which basically says that take your lot size. In our case, our Oakmount project, for instance, I'll just use some easy numbers. It's a 50 by 200 lot, right? So that gives us 10,000 the lot is 10,000 square feet. The zoning bylaw then says we can develop 60% of that lot from a floor space index perspective, right? So I take 10,000 square feet as the lot. I can develop 6,000 square feet of livable space on that lot. So now I know I can build an apartment building there, and I have 6,000 square feet to work with. So then it's just simple math. Do I want my units to be 500 square feet? If I do, I can do, however many units in the building. But I also have to take into consideration things like parking. So for every unit, I need a parking spot technically. And this is where we get into that minor variance application. So what we did is we said, okay, 6,000 square feet, let's go 1,500 square feet per floor. We divide that out and we've got about 750 square feet per unit. And we know we can do 8 2-bedroom, 1-bathroom units. And we'll go in for a variance on parking. We'll say we have 4 parking spots as opposed to 8, but we're 300 meters to the subway station. And honestly, the city of Toronto doesn't really want any more cars. They just want to know that they're not going to be blocking up the streets with more vehicles. And so when you start to look at the zoning bylaws and understand what's available to you, then you start to realize there's opportunity here where most people won't see it. Most people would look at a big house in an old neighborhood and say, I'm not paying $2.75 million for that because I could never make it work as a rental building. But what they're not doing is doing the research that most people won't do to say, what are the possibilities of that lot on a future perspective?
Right. And I'm
Absolutely.
curious, how much does one of those units sell for at a 750?
Or I think you're rented, right?
Oh yeah.
Yeah. What is a rent?
I mean, we could sell them. I mean, the comparables are, you know, we're going to be all in with acquisition and renovation and everything. We're going to be all in for around $600 to $700 a square foot by the time we're done. Just for some comparison numbers, condos in this area are trading anywhere between $1,200 and $1,500 a square foot. So we're coming in at about half of what things are selling for.
Mm-hmm.
So if we wanted to turn and sell, we'd have to go through the condo conversion application. And the city of Toronto is getting a little smart about this. You have to go through a process to demolish or convert rental housing to condos, because they don't want condo developers to go in, buy up rental buildings, convert them all to condos and sell them off, because they eliminate all the rental stock.
Yes.
So when we go in looking at a building, we kind of have a plan. Are we going to make this a condo, or are we going to make it a rental building? And if the plan is to kind of make a rental building, we just pursue that option, because trying to go to a rental building and then convert to a condo after, you need city approval to do that. And they're probably going to say, no, just keep it as a rental.
Okay, very cool. And what is a unit rent for?
Rents are going to be somewhere in that $2,800 to $3,200 a month range.
Wow. Per unit.
Per unit.
Mm-hmm.
Wow. So you're definitely going to be cash flowing, I'm guessing, depending on what your LTV is on your loan, your construction loan and the land loan.
Yeah, this is why I like this economies of scale with that 8 units, because if you talk to most Toronto investors, they say, you mentioned it earlier, August, it's like you invest in Toronto for appreciation, right? That's really the only play. But with this 8 units, we actually have both. We have cash flow and we have equity appreciation. So it's kind of the best of both worlds. And because it's 8 units, we actually can apply for CMHC financing on this building. And because CMHC loves new stock in great neighborhoods, they're pro, this kind of housing. So if we can get a CMHC loan on this property, we're 85% loan to value, under 2% interest, and a 40-year amortization.
Yes.
On a 10-year loan.
Yeah,
so all of a sudden our cash flow goes through the roof, and it becomes even that much better.
Are there any rent restrictions because CMHC gets involved? Do they cap the rents in any way from the regions?
They have other programs. CMHC has a affordable housing program. Then they'll go 95% loan to value, which is crazy. But then they restrict you as to what you can charge for a decade. Yeah.
Incredible.
So we don't do that. Yeah.
I definitely love it. I love that. I want to invest in one of your projects, especially for being a hands-on guy who literally built his business from ground up. I really like it, to also create a thought leadership platform to help everyday people, or people want to learn more and be involved. So talk to us about, how do you finance these projects? Obviously, you're talking about scaling, growing your business. At some point, you're going to run out of your own money. So you're going to need to bring on potential investors. How do you structure that? If that is something you're looking to do or you're currently doing, how do you structure it? Do you structure it to a JV? Do you structure it through, limited partnership? Do you structure it through ownership shares where, there's a corporation and investors and partners receive shares? So tell us about that, and we'll ask you some more questions.
Yeah, it's an interesting thing, and it's probably the number one challenging thing with this style of investing, is because, for instance, our first projects that we bought this year, Oakmount and Dovercourt, were both residential houses, right? So when we're going in, we're saying to the lenders, okay, well, it's a single family dwelling. So can we get single family dwelling financing, right? But we have to, and the lenders are saying yes, for the most part, right? If it looks like a duck and quacks like a duck, it's a duck, right? So they'll say, we can give you 1.75, 30-year amortization, as long as we can qualify. But the problem with that is, they don't like to see corporations on title on a residential mortgage, right? And we want to go in thinking about the future of the building, not this short term, the next 12 months, and getting 1.75% interest on our financing. So we had to look at some alternative options. We were actually able to go to National Bank and get residential financing with a corporation. And we put 3 of the shareholders on the corp that had the strongest qualifying capabilities. I was not one of those people because my debt service ratios are all over the place.
Like all of us.
Yeah, exactly. But what we did then is once we closed on the property, we can start to add the other shareholders in and let the bank know, and they're not so concerned about it. And then on the back side, we've already got the corporation set up. So when we're finished the renovation and now we're going commercial financing, well, the commercial lenders are used to seeing corporations and shareholders and all that on a regular basis. So they don't balk at it at all, right? So that was the structure that we worked under on our Dovercourt and Oakmount project. We kind of went in, purchased residentially in a corporate structure. And then on the backside, we're doing commercial financing with a shareholders agreement. Our new projects, we've switched to a limited partnership just because it's a little better when it comes to financing and the benefits to the limited partners from a tax perspective, from a liability perspective. And so our 2 new projects we're purchasing under a limited partnership. It's a little more challenging on the front end, like I say, to purchase in residential financing. But honestly, I don't really care so much if I'm paying 2% or 6% on the front side, because it's such a short amount of time in the lifespan of the investment that, if we're paying an extra $30,000 or $40,000 in interest, it's not going to make or break our projects.
Great. So let's talk about LPs. Let's talk about the limited partners. So you have your thought leadership platform. You've been in the space for a while. You have the best fashion on the job site. So you have people that you're mentoring and coaching. So you're building that limited partner LP database, that investor database. Talk to us about how do you cultivate those relationships? How do you nurture those relationships? And eventually, when you have a deal, how do you present it? And what is your process in presenting your deals? We are already interested in your deals, but at some point we'll discuss that as well. But talk to us about the process you have in cultivating, nurturing, and eventually presenting deals to your potential LPs.
I'm sure you guys have been there, and I'm sure many people that are going to listen to this have been there, where they want to get involved in real estate and they want to go bigger. And their immediate thought is, well, who do I go to for capital, or who do I go to for qualifying power? And the first people that come back are their friends and family. And I don't know about you guys, but I just hate asking for money. I'm terrible at it. Even though I'm providing amazing opportunity to people, I still have a problem saying like, hey, do you want to invest in my project? It's a bit of a weird thing that I've had trouble with in the past. And so the thought leadership platform and everything that I started to set up was to combat that. I wanted to reverse the situation. I wanted people to be reaching out to me and saying, hey, I've seen what you're doing. I'd love to have a conversation with you about investing in one of your projects. And for me, then I'm like, no problem. I can explain everything that's going on. And that was where I really saw a big shift. Prior to this last year, I mean, I had maybe raised $100,000, $200,000 in partner capital and things like that. We're on schedule right now to raise over $10 million this year.
Wow.
And so it was exponential growth, and it was part of that thought leadership platform and the whole reason why I put that together. So I think for anybody who's interested in it, and I know that people are just going to think like, yeah, but there's already a YouTube channel out there. There's already a podcast out there, whatever. Everybody has their own voice. Everybody has their own style that they bring to things. So there's so much room for growth still in all of these platforms, and just find something that is unique to you. Because I think, and this style of thought leadership is getting more and more popular. Turning on your camera and just having a really frank conversation with somebody, it's what people gravitate towards. They don't want to see the big production values. They don't want to see, the TV shows. It's like, be raw, be real. Give me the real truth of what's going on. And so when it comes to now raising capital, I think I have quite a few people that are reaching out to me and my business partner, Alona. And then it's just, getting those folks into the right situation. Are they an accredited investor? That's a big one for us because, we have to make sure we're on side with all the Securities and Exchange Commissions. Do we need to, or do they have RSP money, or are they in a cash position? Do they want to be an equity partner? Do they want to be a debt partner? So it's just like kind of filtering all those folks in. And I did a presentation last night on our latest offering. I honestly thought I'd have 10 or 15 investors interested in the call. We had 130 people sign up for the webinar. And I think that was really seeing the power of what we've tried to set up over the last year. And it's just really starting to pay dividends now.
Incredible. Yeah.
Incredible. I love it.
You went over cultivating those relationships, and now talk to us about how do you what do you do as far as nurturing? Do you send out newsletters? Do you have certain events? Talk to us about that nurture process.
Are you calling all the time?
Well, and we kind of talked a little bit before we hit the record button here, and that's why we're hiring somebody right now, because it's important. To me, that's the most important thing, that our investors feel like they're in touch, that they know what's going on in the projects. Some of them don't care. Some of them are like, here's my dollars and let me know when I'm going to get my check at the end. But some people want to learn. And I would say for the most part, a lot of my investors are interested in learning what we do. They don't necessarily want to go out and convert a building to an apartment building, but they at least want to know what's going on in the process. And technology is such an amazing thing that we have at our disposal right now. And so we're very transparent. We use a software called monday.com. Everything lives on Monday. So we upload, our invoices, our communications with our architects, the city, our engineers, our contractor posts pictures there. That's why I do so much posting on my social media channels, so that our investors can see, and I tag them and I do all those kinds of things. They really want to feel like they're a part of it. And that's important. But along with that, quarterly reporting, showing them the numbers. We have a webinar on Thursday night this week and Thursday night next week to just give a quarterly update to our shareholders. I think it's really important that people keep everybody in the loop. And even if the update is we don't have any updates, it's just an opportunity to check in with everybody and see how everyone's doing, and give them the opportunity to ask any questions.
Amazing. Awesome.
That was really cool.
Yeah,
I just learned about a new alternative investment. That's really, really awesome.
Exactly. So it's more is for investors to have more options now.
Yeah.
Unfortunately, the real estate prices are so high in Vancouver and Toronto that makes it difficult for people to get into a place for primary residence, let alone to now invest and be actively involved. There's difficulties of managing a property, doing any kind of value add, upgrades or renovations. But the great thing that these alternative investments, like Darren's investment allows, is for people to get involved, invest in real estate, have a management team who's had the background, who's built his business ground up to oversee the project and share with profit. So we love it. We love what you're offering. We love to personally learn more about it and possibly be involved. And definitely like to stay in touch. We've shared your information to our attendees on the webinar, but we'll also share all your contact information on our YouTube video when it becomes available. Maybe we can kind of go over the last question.
The last question I'd like to ask.
Is there anything else you like to? Sorry. Is there anything else you'd like to touch on, Darren, before we conclude?
No, I mean, I'm just always grateful for any kind of platform to get the message out. So thanks for inviting me on, and I'd love to have you guys return the favor and come on as a guest on my YouTube channel as well.
We would love that. We would love that.
We'll love that. Yeah.
So we're all about the passive investing over here at CPI Capital. So we always ask our guests, what's your number one advice, best advice that you would give to someone looking to passively invest?
For me, it's been something that has been a bit of a light bulb moment this year, especially. I think there's maybe it's my upbringing and the way that I grew up. Like, we have to work for our money. My parents always had that mentality, and and I think when I'm talking with people now and they say I want to get into buying properties and doing renovations and having tenants, and I always ask why. Well, I want to make a return. I want to make money. I want to do this and I want to do that. And I'm like, well, do you know you can make 12% on your money by just lending it to other people and securing it against their property? And you sit back and do whatever you want to do and watch them suffer and struggle and do all the things you want to do. And if the goal is for you to make 12% return, then why would you go out and try to do this yourself? Why wouldn't you just put it with somebody who already knows what they're doing? You get to make the returns that you want to make, and that can be inside of your RSP, inside of your TFSA, or in a cash position. So unless you truly want to do those things, I think passive investing is overlooked by so many people because they think they have to go out and do it themselves. So my advice is, before you start getting into real estate investing, if you just really want to make a better return on your money and it's inside the real estate market, I think partnering is probably the thing that I would recommend to most everyone else before they get into actually going out and doing what we do. Trust me, it's not as easy as we make it look.
Incredible. No, for sure. And just to quickly add to that, if someone invests with you passively, Darren, who is looking to possibly get involved in the business, they could learn about how you, put deals together, how you nurture your investors partners. So then they've actually been through the process on the investor side, and then they can kind of grow and try to be actively involved in the business. So even if you're looking to actively be involved, it's good to try it on a passive side first, and then take over the world.
Yeah. And I love what you were saying. Alberta parents, mine too, they're accountants. They never taught me those alternative investments. We were all workaholics. And I'm like, now I'm actually going back to my dad saying, Dad, what's your goal? Your goal is to watch your bank account rise. Well, you don't have to work those 10-hour days, to make that happen. So it's fun because I relate to that. And I think it's great that we're spreading the word.
Awesome.
It's important, right? I mean, this financial literacy in Canada, I think is something that is so underserved, 100%. My nephews and people that are coming into the world now I'm like, you guys, you got a lot to learn. So it's a great first step, your platform and all these kinds of channels that are out there to just really help educate people on what else is available. But I just think there's a lot more that needs to be done.
Beautiful.
Amazing.
Wonderful. It was such a pleasure having you, Darren. Thanks so much.
Man.
Thanks for having me.
Thanks everybody for coming and joining us. Have a wonderful day. We'll chat with you soon.
And we appreciate you all. Okay. Take care. We'll see you guys soon.